All right, S&P 500, looking at it from a monthly macro perspective going back about a decade here. General trend is up, still good. We could see 2020 and also the bear market here, if you can call it that. Both went to roughly the 50-month. Okay, so that's significantly down if we're going to do that, right? That's another 15-16% drop, puts us in line with these highs. Is there any evidence that we're doing that? Not yet. Still have 10 days left in the month. Even if we do that, right, that was a month or two before continuing a rally. Yeah, this one was a little bit longer. So yeah, if we're going into a year plus bear market, then you could maybe bank on something like that. But there's not really any evidence, just like crypto. We'll look at the weekly in a moment, but I wanted to also point out that people get so tied up with indicators and there's so many false signals. Like you want to follow price and candles first and then back that up with your indicators. And most people do the exact opposite. Look at the indicators and they're like, oh, I think price is going to do that. Like, that's wrong. Indicators lag behind price. To do it the other way is incorrect. You don't look at the indicators and think price is going to do that. No. The indicators are doing that because of price. Okay? So having said that, now the biggest warning I would see on this all of this chart is you have a slight, it's slight bearish divergence on RSI here, right? These lower highs, subtle lower highs, higher highs here, but your momentum doesn't back that up. MFI, very, very little. You're still getting like really strong signals here on MFI. Now, if the MFI was, these peaks were like way lower, like down here, like 60 and 46, the context of that is much different versus your peaks are still in super strong form, right? He's like saying like you're in worse shape than this guy. You're both in the Olympics, right? You're still doing fine. So I wouldn't put too much weight into the bearish divergence here because it's still strong peaks, if that makes sense. Okay, so next argument I could see, like the Fisher transform has really crossed down here. Oh shit. Well, that doesn't always work out very well either. Like, let's look at the monthly back here in 2013. Oh shit. 2014, bad. Where did the price continue going? Way higher for a year. Okay, so there's one anomaly, like that you wouldn't put much weight into that. How about the next time? Did we get a, oh shit? Well, here's one. Here's really, look at that roller coaster down. Super trigger down on the Fisher. Really bad. Where did the price end up going? Higher. Wait, we got 2 months down and then higher. Look at this. Right? So hopefully this is kind of illustrating why definitely put less weight on the indicators. And my least favorite indicator out of all of this is MACD. We haven't crossed yet. We are losing momentum, but holy shit, look at the fake outs here. Don't put much weight into the MACD. A lot of people use it and love it, right? But you could, everyone that has a point where the MACD works, I got 6 that tells you it doesn't work. But hopefully that's handles that as far as indicators go. Okay, let's go to the weekly. We can look at the same thing here. Pretty low here. The lowest MFI the stock market has been in a long time. We got to go all the way back to the bear market. Think of that. The bearish that the stock market got is where we are now. Can we let that sink in a little bit? RSI, weak. Weakest in a while. But last time we were this low, October of 2023. Wonder if we did anything significant in October of 2023. Look pretty bearish. Ugh. Should you have gotten out there? Are we ringing bells here? Right? I just don't see it yet. I don't see any macro evidence of something catastrophic on the horizon. When you're feeling terrible and you're feeling like we're definitely going lower, those are usually the signs you got to wait. It's so hard. But whales usually buy at those levels. Like when you're most panicked and the majority are most panicked, that's when people are buying. Like the pandemics, these lows, when you get to the 200 week, We're at the 50. We're holding up so far. Not saying we can't go lower. Not saying we're not in a bear market, but when you're in extreme fear, and when you have these quick moves down like this, there's 10% in less than 3 weeks. The stock market for that to happen is pretty rare. And when it does, like when it does it quickly, right? You seeing this, right? Quickly, there's usually at least bounces, right? And certainly after like these kind of uptrends, closed harshly under the 21 week here, rally back in as resistance. We haven't even rallied back to the 21 yet. So again, just like Bitcoin, I think you got to wait for the rally to know if we're in trouble. Like, this isn't trouble to me. The trouble would be if we come back up and then, struggle for a couple of weeks to flip back under above the 21. That would spell trouble, just like we did back then. But getting nervous in a 3 week 10% sell off, no, don't be a rookie, right? That's not when you get nervous. It's look at this. And even then, like we went lower, but when you break the 21, rally back, and then hold resistance, you're probably going lower. Break the 21, rally back, hold resistance, you're probably going lower. That's not the time to panic down here. You don't panic in the red. You panic if the green starts to fail, right? If the bulls show up for you in defense and then they run, right? That's when you panic. Not down here, right? Unlikely that we're just going to just fall off. This is what everyone thinks. When we see some panic, it's just going to continue indefinitely, right? We're going to 4,500 next week. No. We're going to likely see a rally in the next couple of weeks. Maybe next week. The 21 is where you'd want to be watching. If we hold there, which maybe we do, right? You can see certainly some maybe evidence of that. Range highs, range lows, range low wicks, range low wicks. One kind of like deviation swing out. Okay, now we broke through. We got a little gap here. Okay, if we get a bounce here, which as of current, that'd be another 5% rally, roughly 4 or 5%, depending on where that 21 is. Then we'll see where that wick is. If we flip this and we come up and we rally, and then you see us selling off, and then we try it again next week, right? Just look at the previous times, right? That's what you'd be concerned with. So if you're concerned and you don't want to get trapped and you think we're going down here, wait for a rally and then sell. Sell up here or sell some of it. And then if okay, let's say you sell, you're like, well, what if it goes higher? Then you buy back in higher if it makes a newer high. If it takes out this high wick, then you just get back in there, right? You missed a little bit, but it's better safe than sorry, right? So maybe it's 20%, 50%, 80%, depending on how nervous you are or what you got going, right? If you're trying to put a down payment on a house or buy a house in cash or a car in cash, and you can't afford to lose this money, then you might want to take more off. If it's a 20-year play, then maybe a little bit less. Hopefully that makes sense. Hopefully this helps paint a perspective of kind of how I look at things and how you should probably start looking at things. You don't panic in the red. You panic when the rally comes and then the bulls run away.